Hey everyone, it's Phil C here from Brisbane City, and in this video I just want to keep this short, and that's actually quite a challenge to me, for me, is having short videos, because on my YouTube and in the live room can end up 2 hours long.
Welcome to Star Prosper with Phil C.
But yeah, what ends up happening is I do this short video and then it just stretches out to too long. That's the time frame, too long. So in this video, I want to walk through Euro-Yen on the daily into a 4-hour, and I'm just going through reading price action and identifying structure levels and reading the language of the markets, and all that is following the ebbs and flows of the market and waiting for opportunity to set up and then take advantage of that opportunity. Let's head over to the charts and go through the Euro-Yen. And I identified a Gartley pattern as well with a really good risk to reward. I also explained something really important as well, but we will get to that shortly. Let's go. We are moving towards left to right, like this. Okay, so we are in this range right here. And what I'm looking for as I head down to a lower time frame is see if we can find any pattern setups. So let's go to the 4-hour time frame. Actually, what I'll do is get rid of this, like this. And then we'll start from our starting point up here. So we go from the highest high, right here. Go from the highest high, and we'll read price action together. We have our swing high to swing low. This is our starting point right here. Then price action comes all the way up. Then we get a move. Where's the low here? Lowest low would be here. We get a short move down, and then we get another move up. So we're retesting, dropping a line tool right here. We're retesting these highs. Okay. Then we get a move all the way back down, retesting these lows right here. Price action pushes all the way past that, giving us a lower low, lower close. Okay. Price action pulls back all the way back up into, look left, these highs right here. Okay. We come all the way back down, anticipating that price action is coming to retest these lows down here. But we fail to retest these lows. And then we're heading back towards the upside here. Okay. So we're heading towards the downside. 1, 2, 3, 4, 5, 6. Lower low, lower close below these lows, indicating that we may come up and retest the lows and further, but we don't. We come back up, then we come back down, fail to retest these lows, and now we're sitting at previous support, resistance, and then we channel. During the channel, what I'm waiting for, so as price action is moving towards the right side, what I'm waiting for is price action to come all the way back up into retesting these highs right here. If that were to happen, let's grab a Fibonacci retracement tool, swing high to swing low. You can see that we hit the 618. So that would give us our Gartley pattern. That's first condition met. Then let's take our Fibonacci retracement tool from swing low to swing high. Okay. And then we come down nicely, touching the 618. So that's condition 2. So as you can see, we're following price action, identifying what it's doing. Excuse me. And we continue to do this until it sets up an opportunity. Condition 3, after we got our first 2 conditions here for the Gartley pattern, condition 3 would be a Fibonacci extension tool from swing low to swing high, back down in. And what we're looking for on a Gartley pattern for condition 3 is a CD completion towards the upside. So this is a textbook example of a Gartley pattern right here. If price action continues towards the upside, we will get a CD completion here at the 127 Fibonacci extension. So if price action hits, so as we push all the way towards the upside, if price action hits the 127 Fibonacci extension, then we get our condition 3. Okay, all 3 conditions mean the criteria is met for a valid Gartley pattern. Following the if-then syntax, if that happens, right, if price action completes the D point at the 127, then we can sell into the 382 and the 618. Okay. So we have our X point here, A, B, C, and then potential D. And we also have an equal level move here as well, right here. So we have A, B, C, D, that's an equal level move, A, B, C, D completion at the 127 for a potential Gartley pattern. Now, price action doesn't have to do that. As we get a lower low, lower close below these lows, looking left, we could potentially see another move towards the downside here, right? You get another move towards the downside, that's a 618 and a 50%. You get another move towards the downside if we do a Fibonacci inversion like this. You could see price action coming all the way down into a 1618, and that would be setting up a crab pattern for a potential buying opportunity at the 618. Okay. So again, analyzing price action, identifying price action, following price action. If it sets up an opportunity, then we have permission to execute the trade. Then we have permission to get involved. So this is what the pattern would look like. If I just finish it up for you here. I'll make that like this. Again, just so it's clear for your eyes to see. Like that. If we get a move towards the upside into the D point completion, we can sell. So entries would be at a 127. This is our potential sell zone at the D point right here. Price action pushes up. We've got, this is actually a really nice setup. You could get involved for a continued move towards the downside as well. We have really good stop placements on this trade because stops go above your X point looking left, right? Stops go above the X point looking left. So your stops would be right here. Make that red. Stops would be here. Your entries would be at the D point completion, and targets. Where are targets for a Gartley pattern? targets for a Gartley pattern is a Fibonacci retracement at A all the way to D. Fibonacci retracement tool, A all the way up to a D point completion. Our targets, 382, 618. So target 1 here would be right there because we want to front run. Reason why we front run our targets here is because we want to account for the spread, right? So you don't want your targets all the way down here. Remember, the market is imperfect. You want your targets to front run just above the 382. So that's target 1, and then target 2 is right down here at the 618. So also make that green, and there you go. We identified price action. Is that easy to see? Let's make that a bit brighter there. So again, we follow price action. We understand the language of the markets. We are reading the ebbs and the flows, and if something sets up here, for example, this potential Gartley, then we can look to sell it into target 1 and target 2 with a really nice risk to reward setup right here. Okay. So you have just over a 1-to-1 to target 2 and about a 3-to-1 to target 2. Now, if the Gartley pattern has a 50% win ratio on the Euro-Yen 4-hour time frame, and every time price action sets up this opportunity for us, and we have a D point completion, we execute the trade and we get involved, we have a winning system. All you need is a 50% win ratio. You don't need 80%. You don't need 90%. You don't need 99.9% win ratio. What you need is how to identify price action, how to look at structure levels, follow price, identify the ebbs and flows of the market, have a strategy that you know has a proven probability to gain more than it loses every time it presents itself. And all that is having a strategy that has a positive expectancy. So after those steps, if you wanted to trade patterns or any strategy, trend continuation trade, Fibonacci inversions, flag patterns, pennant patterns, wedge patterns, evening stars, morning stars, any of those, you need to test that strategy. Find out that it has a positive expectancy for you because your eyes are going to see it different to other people. You can't just watch someone else trade something and then begin to trade it yourself and expect similar results. It doesn't work that way. What you need to do is learn the strategy, right? Learn the rules of engagement, the criteria that makes up that strategy. And then you need to take those rules and then go back test it yourself. And start with the pairs that you like. Euro dollar, Euro yen, pound dollar, pound yen, dollar yen, Aussie dollar, Aussie yen, Kiwi dollar, Kiwi yen. You start with Euro dollar. You start with one time frame. You go back 3 years. You go bar by bar through the market. And you test the strategy. You put it in a spreadsheet. You put in your entries. You put in your stops. You put in your targets. How many times did it hit target 1? How many times did it hit my stop? How many times did it hit target 2? When did the pattern complete? When did it hit target? When did it hit stop? Which session time was it? Was it Tokyo, Oceanic, London session, New York? Which session was it? So now you're finding out when and where the pattern completes, and when and where you have a good win ratio on the pattern. And getting back to this example here, when you find out that data after you've collected it, when you find that out, what you're looking for is that positive expectancy. Every time that this pattern sets up and completes, how many times does it win? And the positive expectancy is what's all it means, a PE above 0, positive expectancy above 0. All it means is it gains more than it loses, okay? So if you have a 50% win ratio and you have a risk reward like this every single time it sets up, and it hits target 2 more often than it doesn't, 30% of the time, right? So 50% of the time, it hits target 1. 30% of the time, it hits target 2. You have a winning system. It doesn't have to be overcomplicated. Basically, what I'm telling you now is the key turning point in most people going from struggling to actually seeing positive results. And those positive results can end up being profitable for you if you follow the steps correctly. So when I'm developing a strategy or I'm looking at a strategy, I'm testing that strategy, what I'm looking for is a 50% win ratio. That's it. If you give me a 50% win ratio and I know when and where it performs, and I have a risk reward like this, so I gain more than it loses, guys, I have a winning system. All you need to do after that is to trade that plan every single day with consistency. It's that disciplined activity every single day that is ultimately going to generate the results. Now, those could be results that are not profitable, or those results could be profitable. Results don't differentiate between good results and bad results. They are just results. But what you're doing, setting it up in this way, is those results, those positive results, you want them to be profitable results for you. You understand? So I wanted to do this video. Excuse me. I wanted to do this video just to show you how simple the process is. Now, nobody is saying that trading is easy. Psychology gets in the way, emotions get in the way, I understand that. But as far as the formula goes, as far as the process goes, what I've shown you here and what I've told you and what I've shared with you, and I trust that you do find this valuable, that is the right steps to do. Have you ever heard of doing certain things in certain ways? Well, this is it when it comes to trading. Doing certain things in certain ways. Because if you follow the process, then results in trading, those positive results, those profitable results, is absolutely inevitable for you. Right? But it requires doing the process correctly. It requires doing the right action steps every single day in the right way. And you can make this work. So we follow price action. We identify a potential trade setup. We know our numbers because trading is a business, and we treat it as a business. And ultimately, it pays you as a business, by the way. And then we wait for price action to come to us. Now, this could never fulfill. Price action could never get there. And then we don't have an opportunity and we don't get to trade. And guess what? Some days you don't get to trade. And some other days there's too many trades. Because we want to execute every time a trade opportunity sets up for us. There could be many in a day, or there could be 0 in that day. And sometimes you don't get to trade that day. That's the hard part. Sitting on your hands and doing absolutely nothing. Watching the market, waiting for the market, waiting for price action to come to us. And when it does, we know that we have a 50% chance to hit stops or to hit targets. And if we trade it every single day over time, throughout that trading year, we are going to have more pips than we are. We're going to gain more than we lose, right? And those pips equal dollars, and dollars equals money, or euro, depending where you're from. And, that is trading at its core. I can't put it any simpler than that. Understand the language of the market, read structure, read price action, follow the ebbs and flows, wait for the price action to set up a potential opportunity for you that you've tested and that you know has a proven probability that has a positive outcome for you. And trade that every single day with discipline. Again, I just wanted to put something together for you because, I'm not doing the live room, but I wanted to do something for you and something that was going to be valuable for you. And I trust that you do find this valuable. If so, please like and subscribe to the channel. Help me grow and reach as many people as possible. I can't do it by myself. I do need you. I need your help. I appreciate if you could do that for me, and I'm grateful for anyone spending time with me on this video. Really, thank you so much for that. Your support means the world to me. So please share it. Have a wonderful weekend. It is Friday. Until Monday, for those of you who are in the live room. Until Monday, be safe, enjoy life, and I'll talk to you soon. All right, thanks so much.